All right. Ladies and gentlemen, welcome to an unnamed show. I'm not exactly sure. I called it the Bull Case, the Responsibles, who knows? But on my, I guess, digital right here, the great and powerful Brad Freeman, and underneath is Evan Stock Market News. How you guys doing?
I will cede 100% of naming rights to you, Tanner, if you stop calling me great and powerful at the beginning of every episode.
No, did I not say it then?
No, if you stop doing it, because I
Oh, okay.
am neither
It will
great
never
or
stop.
powerful. Okay, then I guess I'll just keep blushing. But I'm good, man. How are you doing?
I'm doing good. I'm doing good. Evan, I
Yeah,
think you
boys,
might
I'm
be.
I am doing well. I'm excited for this conversation. There's a lot going on in the world, in like whole different areas, but there's still so much going on in the tech world. Like literally, even some of the stuff I don't know if we'll end up covering on this one. Like I'm really excited to talk about Meta and a couple other big ones. Like AMD had like an event a couple weeks ago. That stock's been going crazy. I'm sure that will be a conversation at some point. There's just so much underlying going on right now. Even Amazon, there's a lot going on in the ads world. I've been noticing through like I saw an Amazon and Disney partnership. I feel like Amazon and Roku partnership.
Yeah.
So there's a lot going on in a bunch of different worlds that maybe aren't getting like so much attention right now because of how macro is going to it. But I'm excited to talk about some of these conversations in these stocks.
Yeah, an oasis away from all the other stuff that you guys, I'm sure, are seeing on your social media feeds constantly.
Yeah, that's fair. Do you want to jump right into some meta conversations, Evan?
Yeah, I thought this was one of the really big stories of this week. And honestly, it didn't get that much aggressive attention, which maybe surprised me a little bit, but we'll see on that one. Meta is starting to try and monetize WhatsApp for the first time. And maybe I can even pull up this that I had. I think the story is not here's how they're trying to monetize it. You can argue, is it good? Is it going to work? Is it not? It's very clear that WhatsApp is, a messaging app between friends for us in the US, maybe when we're talking with people abroad. But when you're in these abroad countries, like they use it for everything from talking with businesses to, payments to like just there's so much used in WhatsApp. So there is a very big opportunity. And I think for me, the focus of this has always been an asset that we know had billions of monthly active users. I think for some reason 2-3 billion is the number in my head, but I could be off on that.
Over 2 for sure.
So over
So
2,
right.
and they have not tried to monetize that at all. It's always been, hey, we're gonna, grow in the future. We'll see. We'll kind of go into it. And there was a lot of other announcements made recently. A Scale AI thing, acquisition or partial taking % acqui-hire really. There was a story that Zuckerberg is now trying to build, like personally build an AI team because he felt like they were going behind. So I don't think the timing of this is a coincidence. It feels like we are at a very pivotal time for Meta right now. And, I want to get over to Brad because he's the expert on this one. A couple years ago, we had the year of efficiency for Meta, which is weird that it was a couple years ago. I wonder if we are setting up for the year of growth from Meta and Zuckerberg. And it feels like that is the type of thing that I am seeing as someone who is biased, bullish Meta. I went and bought another share in after hours yesterday or whatever because I was like, I think we might be setting up for a year of growth from Zuckerberg. And that might be the year of that what the focus is. But Brad, I'm curious your thoughts on everything I was saying there and your characterization on the WhatsApp store. I didn't dig in far enough on like what they're actually trying to do to monetize the ads.
Sure.
Just that they were.
Yeah. So I'm glad we're starting off with this because it's super important. And like you talked about, I mean, this is the same playbook we've seen for Meta building every single app that it's ever built, and now what it's doing with Threads. They take their sweet time monetizing. They build a massive base of critical, loyal, engaged users, and then they turn on the money faucet. So they've done the hard work here. They've built a base of, like you said, 2 billion plus monthly active users, over 100 million in the United States, growing really quickly, really starting to gain some traction against iMessage that once was thought to be impossible, but it's starting to happen. I know some of my use cases for chat have moved over for WhatsApp for large group chats. But now it's time for the fun part. It's time to actually get paid for the traffic that they've painstakingly built for a very, very long time. And it will be it will be extremely margin accretive. I mean, they are quite literally just monetizing digital real estate that they've already earned the right to have, that they've already earned the right to own, and have just been to create a frictionless experience, or because of focus on other things, or just because it's what they do. They've waited until now to do it. So Year of growth, I think hopefully every year is going to be a year of growth for Meta. This year, I think, here, let me pull up sell side consensus, 14% growth this year, next year, comping over 22% the year before, and right around that 14% range in the years before. So pretty consistent. I just think they have so many levers to pull in terms of, I mean, Threads monetization is just now ramping, but they're going to take their sweet time with that, just like they did on WhatsApp. So that's a future monetization lever. You think of all of the users they have on Ray-Ban now. We'll get into wearables in a minute, and Quest, if that ever turns into a more compelling product that's adopted by the masses, another boatload of impressions and app store sales and all these things that they can layer on for very margin accretive revenue. So just a lot of optionality when you own such a large portion of the digital media space. You inherently own a large portion of the digital advertisement opportunity. And they still have such a long runway in terms of turning on the money faucet again and just taking advantage of this. So from an investor point of view, I mean, you have a company that's already printing cash, that's again growing top line at 14%. That's trading right around 24 times operating income, and they just have so much more that they can do. Not to mention the fact that they're still somehow growing daily active users across their 3 billion base of users at a decent mid single digit clip. So just a lot going right for Meta in that regard. And I think we'll go get into some other things in a minute about how things are going elsewhere. But I wanted to stop there and see if anyone has any follow-ups.
Tannor, I want to hear your initial thoughts on Meta. I don't know your take on it. I was looking at your stock draft that you guys ended up doing, and I saw Meta got past you and everyone on the first round.
Well, I picked NVIDIA first round, which, I mean, that's still my biggest position in my own portfolio, so I had to pick it. Meta is a company that I don't personally invest in my own portfolio, and every day I just think, I don't know why I'm not starting an allocation in this. I just feel dumber every day, but I just don't know. Well, one, I don't use many of their products. I mean, aside from a group chat or two on WhatsApp, I'm not a Facebook user, Instagram user, or anything like this. So it's hard for me to relate to some of those things. Meta, like the Ray-Ban products, I'll be probably one of the first adopters if they start becoming, more useful over time. But I don't know how they continue to grow daily active users. I mean, what are we at now? 3.4 billion or something like this? Like, it's absolutely crazy. What number does that get to? So I've always just had slight concerns there, or like moral concerns with the style of their business or something like this. But it's one of the largest businesses that have definitely passed me by, which makes me sad.
I should probably mention really quickly what ads are coming to WhatsApp. I didn't really talk about that. So just to give an idea of what they're actually doing, they're putting in display ads for their updates tab. So you just think about communities and businesses and people just giving real-time nudges and updates on whatever's going on during the day. Very easy to plug in actionable, hey, go buy this, or hey, go schedule this event, or hey, go buy this ticket. And then they're adding search ads and premium subscriptions to their WhatsApp channels page. So again, probably traditional sponsored listings is the best way to think about that. If you're searching for new channels to find new content, just people paying to push their way up that feed, like you see on Google and pretty much everywhere else now.
Yeah. Is there any other meta topics? Like, Evan, what are your sort of opinions on this name specifically?
I think it has to be talked about within the scale of, this is a Magnificent Seven name. It's one of the 5, 6, 7 companies that's above $1 trillion market cap. So obviously it's going to be fantastic. People might actually question that. Roy would be like, oh, look at it, Apple. It sucks so much. You don't even have to be that good up there. But no, clearly all these companies are going to be fantastic. But what I'm thinking about those bars, Meta is definitely one of the ones that I get really excited about over the next future. Now, obviously, NVIDIA is underpinning a lot of stuff. And I really believe in like the area they're in. Maybe some people will come up and compete with it. Apple, Microsoft, Google, I don't know. They just don't necessarily get me super excited about that. Amazon does, and Meta is one of the ones that I maybe would even put up towards the top. I really am a fan of the social media space and their domination of it. It's really just a cash cow machine, and they're one of their most used asset, which probably will be a little bit more difficult to monetize because it's used differently. They haven't tried monetizing at all. And, Threads, they're able to just bring up 100 million user platform. They're going after Elon. Threads isn't that great, but it's better than you'd expect. So, from the social media landscape, which I understand pretty well, like, the business is pretty clear. It's a cash cow. I really like what I see as they are taking that cash cow and what they're investing in. Clearly, the Reality Labs was a joke and still maybe is. But when we look back in 10, 20, 30, 40 years, yeah, it feels like that will have been the direction we were going. And they were probably just early and just wasted a lot of CapEx. But at least Zuckerberg was in the right direction. And the Scale AI acquisition, it feels like Zuckerberg's still has his finger on the direction which we are going here. And I think that founder-led aspect, which there's only one or two other companies up there in those Mag 7 that still have that aspect, is a pretty strong and underlooked asset. So,
what are your guys' thoughts on that acquisition, by the way? I think it was like 49% stake for $15 billion, if I remember correctly.
Yeah, it was it was really an acqui-hire. They wanted to get Alexander Wang on the team. I also saw some reports that like Google, they had a lot of deals with Scale AI and they're stopping those. So I would love to hear Brad's take on that. And obviously, I'm giving you more qualitative things. Brad's much more of a number guy. So, and he's a fan of it. So I'd love to hear like the number aspects of it, but you own, I don't know, I think it's like 2 out of 7 of the Mag 7. I don't want to go through the things. If you guys want to see actual in real time and all the other stocks he has, link in his bio. Really awesome. You get to see his portfolio, private newsletter. It's fantastic. Tanner's got some cool stuff in his bio too. You should subscribe to his channel if you're watching this and not. But Brad, I just turned into a whole promo there. What's the take on Meta here compared to their Mag 7 names? Where does it rank for you?
Yeah, well, there's a lot in that question. So I'm gonna handle the Scale AI part of it, and then if you want to ask follow-ups about like just general landscape of Mag 7, happy to cover that. But so Scale AI, they are a data tagging and organizing company. So basically, what they are doing is making sure all this gigantic pile of slop or unstructured data that these models are trying to sift through and inject to train their LLM better than the other guy, so that they can eventually drive post-training inference better than the other guy can for less money and higher performance per compute. So basically, what they are the data ingestion sorter. So they're making sure that everything going into these models is relevant and value creating and not redundant, and things like avoiding malicious prompt injections and making sure that it's not just being fed unreliable or sometimes, downright inaccurate information to do things like raise inaccurate answer rates or hallucination rates. We have to use third-party sources just because they're private. So in terms of revenue, these are estimates. So hopefully they should be mostly accurate. They did 900 million in revenue last year, supposed to do 2 billion this year. So I think it was somewhere around a $30 billion valuation. So they're paying 15 times sales. I'm assuming they're not making any money yet. Just a hypergrowth AI startup doesn't really scream profit focused at this stage of their journey, and probably rightfully so. But in terms of customers, who's paying them to do this right now, that data tagging and also helping with like scalability of data ingestion, so to make sure that models can field and use everything that they need to get a leg up over the other guys and all these key performance indicators that we're constantly tracking. But it's an impressive list. So Anthropic, Cohere, and OpenAI. So arguably the three most impressive pure play OpenAI or pure play Gen AI darlings right now. The Department of Defense, OpenAI, so Microsoft, NVIDIA, Amazon, Toyota, Uber, GM, Samsung, Accenture, Databricks. Just a really long list of bellwether clients. And like you said, an acqui-hire. Alexander Wang is. If you just go on Google and read a little bit about him, he's a very impressive person. He was at a high level coding job in Silicon Valley at age 17. Dropped out of MIT. And the similarities you hear between him and Zuckerberg will also start to kind of become clear, which is why I think it's such an interesting duo. 2 college dropouts that were 2 of the youngest self-made billionaires that our world has ever seen. He was a coding protege when he was growing up. He was Sam Altman's roommate during the pandemic for a while, and just extremely highly regarded in this field, and someone who I think is going to be a very important addition to Meta's AI ambitions. Not to mention the fact that he's bringing several other senior level engineers over with him to build this super intelligence team that they're working on with Meta. But I do think some people are saying this is a response to Meta falling behind and Llama losing its luster, and I think that's probably true. But I think these companies, Amazon and Google and Meta and all and OpenAI and Anthropic, I think they are going to consistently and constantly leapfrog each other in terms of model capabilities over the next several years. And I think the company falling behind right now is probably not going to be the company we think is falling behind a year from now. And honestly, when Mark Zuckerberg's running the AI team and running the show, pace of innovation is not something I really worry about. Focus is sometimes something that I worry about. Where, I mean, you saw the metaverse investments, and that rightfully shifted to investments in core AI and agentic AI. But right now, focus does seem to be there, and they do, since that year of efficiency, they've done a really good job of walking and chewing gum in terms of making sure they're pulling the monetization levers, just like WhatsApp and what we just talked about. Well, they're also investing in things like Ray-Ban glasses, which are, I don't think arguably, but I think, I mean, it's an opinion, so I won't call it objective, but the leader in consumer AI hardware right now. Not to mention the fact that they're now expanding with a new partnership with Oakley, which we could talk about soon if you'd like to. So I think from a social media standpoint, they're absolutely killing it. From a wearable standpoint, I think they're leading. And from a model standpoint, I think Scale AI is going to give them the muscle they seemingly needed to continue being a large player in the space, and specifically in the open source realm of this space. So yeah, I should.
Is the Oakley thing, is it anything more than just like a reskin of like you put the same tech just in a different pair of glasses?
I think, I mean, there are, I think that's what it is. Maybe there will be a few new bells and whistles when it comes. I think it's coming out Friday. I'm pretty sure that's when the product announcement is.
The 20th, right?
20th, yeah. So Friday. Good job, Brad. So give myself a high five real quick. But yeah, I think it's gonna. I mean, it is incremental because professional athletes are not wearing Ray-Bans on a field. Like that's not gonna happen. And if you're going on a long run and you don't want to wear an Apple Watch, but you want your glasses to kind of track it or whatever. I mean, the sport mode use cases from Oakley. That form factor needs to look like something an athlete will wear during an event. And I don't think a stylish pair of Ray-Bans, though that's what I gravitate towards, I don't think that's really what Patrick Mahomes is going to want to wear. He was teased as a partner for this launch, I think. But so I do think it's incremental, but I think it's incremental mainly from a stylistic standpoint. So I'm more excited for Orion and what that conceptual project turns into, just because I think that's going to be such a large leap forward for combining the power and utility of these really uncomfortable, sweaty headsets with a lot more comfort of wearing a pair of glasses daily. I think we're still a few years away from that being a reality, but that's going to be something to stay laser focused on. And I think updates like Oakley are fun and cool, but maybe not as needle moving as that should hopefully be.
Yeah, Orion gets me excited, but it also does feel years and years away, almost like a concept car in a way, where it's like, it's very exciting, but we have a lot more breakthroughs to go before this even becomes a reality. At least that's the way that I see it.
I don't think they've given a launch date, so I think when that's the case, you can assume it's at least a year or two out, if not more. So,
Sure. Go ahead, Evan.
We should move off of this one because we've been going for 18. I love this stock, but I also think the one thing I want to leave on it is like, look at the acquisition track record of Meta. A lot of these smaller ones, it's going to be hard to see how they actually, sometimes they just get worked into it. The larger ones, you can look at how they've done off of some of them. Like, you can argue Oculus didn't go super well, although maybe that's underpinning a lot of tech for the future. But when they make a big bet, history has shown them to be right so far. History does not equal the future, but I have a lot of faith in Zuck as a CEO.
He's pretty good.
I don't think that money is misplaced with a young CEO that's been a founder his whole life and has continued to innovate and change as the landscape around him has also changed. So
I just think we've talked about this maybe 2 episodes ago or last episode, but when Apple fired their ammo of no more cross-app data sharing and Meta figured out a way to plug that signal gap for their digital ad business in like 2 years, I just think that was the largest company in the world who you were fiercely reliant on for so many years just pulled the rug out from under you, and you figured out how to make it work in pretty short amount of time. So to me, that was, if he wasn't battle tested already, he was battle tested and then some times 10 after that. So
yeah. Did you guys a little pivot off because there's a lot of news on Robotaxi right now. Waymo is now expanding in a lot of their regions. If you guys saw that news today, I actually have a slight clip if you guys want to see it. It looks quite fun. But this is seemingly, becoming more of a reality much quicker than people may have assumed. When do you guys think that Robotaxi is something that, we get for day-to-day real life? Is this something that actually does happen in 2026? Or obviously Waymo is able to be ordered right now, but this is only in very, very select cities. They're trying to expand it out more in 2025 and 26. But when do we start getting third and fourth players that people can actually start ordering, or even a second player? But hopefully that's the 22nd or 28th of June here for Tesla in Austin. But do you guys have any real timelines that you guys are assuming, or any information that you guys hear from other teams?
I guess I could take it quickly and then pass it over to Evan. I think there are a lot of well-funded players in private markets. Uber's investor presentation like 3 quarters ago had a good chart of here are our partners and here's everybody else in the space. But like AV Ride and May Mobility and Zoox from Amazon and Mobileye and all these other companies that are racing to get to deploy this year. I think those deployments are all going to look kind of like what Tesla's does in Austin right now, very slow, with more testing to make sure nothing's going to break and no one's going to get hurt via negligence. And I think it's going to be an extremely slow rollout that Waymo is going to continue to lead probably for the foreseeable future. But I do think there are several players coming. I mean, we talk about Waymo and Tesla constantly. Sometimes people throw in Zoox from Amazon, but there are so many more. Not to mention outside of the USA, where competition is probably going to be more fragmented more quickly, especially in China. But yeah, I do think and then Volkswagen and Toyota and all these OEMs who are trying to figure out their partnerships in the next couple of years. So you will see, I think, headlines about I think AV Ride is Dallas or a few other cities. There are a couple deploying in a few cities this year. In the USA, and you'll see social media clips about people hopping in and having a good time. But I think that's going to be more experimental and more proof of concept. And I think in terms of a scalable commercial business, it's going to be a few years before anyone has what Waymo currently has. And I mean, just more info out of Austin. It's confusing. I mean, I see, and it's always confusing with Tesla. So I see some people saying there's some people showing clips of a Tesla driving past a stop sign on a school bus and drilling a test dummy. And then I see other clips about people saying there's no supervision like people thought there was going to be. There's no geofencing. There's no anything, and they're just full speed ahead and just testing for the final confirmation to really roll out. So there are many people confidently saying both of those things with a lot of opinions few and far between. So for Tesla, I don't really know. I don't know how it's going because there is so much noise and so much distraction and so much misinformation all over social media from both sides of the coin for this company that I need to see what I mean. It's like the only way we're going to know is through actually observing. So I think many more are coming. Tesla's going to be one. I think that's a pretty safe assumption. But in terms of what Waymo has done and replicating that, I don't think it's as easy as flipping a switch like some of the other vendors have said. I don't think it's remotely that easy. And I think that lead is somewhat defensible, at least in the near future.
Yeah, I think the things that get me excited is that, at least from what some people are saying online, is that the models are getting better and they're probably not going to take backward steps too often. And the robo-taxi future is coming fast, and the car that I own today will probably be my last. After that, it'll probably be me ordering very, very cheap full self-driving vehicles to take me from point A to point B where no one else is in my car, and probably save a lot of money doing so as well.
Do you like driving?
No.
I love driving.
I don't at all. I had this conversation yesterday. I drive in miles, probably like 700 miles a year.
Okay.
And even whenever I was getting insurance on my car and I was trying to tell them how little I drive, they're like, we don't really we're placing you as an elderly almost in terms of you're barely behind the wheel. I hate it. Not that I'm scared or anything like this. I just think it's pointless. I'd rather be doing something other than having to full focus on the road.
I get
You know?
my thing is I get motion sickness if I'm not behind the wheel, and I get car sick and a little nauseous. So maybe I'm weird and in the minority, but I don't know. I like the freedom of hopping on an interstate highway and driving for several hours to a hiking trail or somewhere new is fun. But I know that's like me saying I don't want 24/7 stock markets. It's like, yes, that's my opinion, and yes, I know I'm going to lose that argument, and it's going to happen. So.
Yeah, I mean, you definitely do have some opinions like that are
boomery.
That's a good
Michigan
word.
fan, rough.
Yeah,
Michigan fan.
That kind of drags us into another topic that maybe you guys want to discuss. Which, well, I don't know how much you guys want to discuss. I'm dying to discuss what's happening with Coinbase, stable coins, tokenization of real world assets. Now, I wouldn't necessarily call myself the biggest Bitcoin bull or anything along these lines, but I am a big believer in blockchain saving a lot of money, improving security, improving speeds, instant settlement, things like this that could save not just crypto companies a lot of money, but really every single business. Amazon, Walmart.
FX fees suck. Yeah. So
FX fees suck.
Yeah.
So there's been a lot of changes right here lately, and Coinbase is being put in the news a lot. I mean, Circle, how can you not talk about it? They're up like nearly 6x since IPOing. All on the idea that, traditional financial rails are going to go extinct and we're going to go on a potential blockchain. Now we're having JP Morgan come out and say they're trying to create their own stable coin. They deal in trillions of dollars that pass through their systems, constantly. So I personally think that this is coming. I think Coinbase is very well positioned. However, I don't have a position in the company. I'm not trying to pump any books here, but Brian Armstrong, their CEO, has been pretty consistent saying that they have had opportunities to acquire or try to get into equity stock trading or stuff like this, but they've not ended up, picking up these easy wins. Instead of that, they are preparing to just be stronger in crypto and let traditional finance come to them. And I think that that's happening. I mean, we're seeing payment rails come to crypto. Now, Coinbase, I think it was just today, is seeking SEC approval to offer blockchain stocks and bonds and these sort of things. So tokenizing those, ownerships of those companies. And I'm just curious, does this excite you guys at all? Or are you just going to be happy the same way that like owning Walmart or any of these businesses were happy whenever the internet came in? Like it's just a benefit to an existing business that already exists.
Evan, you first or me first?
I'll jump in here. I own crypto. I own Bitcoin and Ethereum. I have like 10% of my net worth in it. I think a lot of the stuff do make sense, but in the nicest way possible. If you are a big Bitcoin person in here, like every single time I'm like getting super in there, I just look on Twitter and just more stupid stuff. A lot of it makes sense. I just don't get like, what's the differentiator here? Like why? Like I heard you talking about this yesterday. Like what does Circle's stablecoin have that these other ones don't? And the way that it feels like a lot of these crypto people think that this is going to create a whole nother industry and a whole nother area of ecosystems and stuff like that. Whereas what I've started to feel like is kind of what you were saying there, is that this is more additive to the JP Morgans of the world, to the existing ones, to the Robinhoods of the world, even Coinbase and SoFi and whatever it is. But it feels like it's going to be something that a lot more companies that are pre-existing use, and maybe some crypto native ones come out of it. But that's not what I have seen so far. I just don't see a full ecosystem coming out of this. It feels like it's going to be more additive to this, but I'm here to be wrong.
Yeah, I think to me, the most exciting part about this is there was a piece of news from Shopify last week on adding I don't even know USDC support through Base, which is owned by Coinbase, to Shopify payments and Shop Pay. And the interesting, so I mean, in my mind, more payment choice without creating annoying complexity or clutter is always a good thing for conversion rates, and will always be positive for GMV for platforms like this. So that's easy enough. 2 thumbs up. But the other exciting thing about this is like we talked about, the lack of traditional fees in some areas that you have with, like when you use a Visa, and then processing fees and FX fees that you're using when you're using a credit card, that goes away. And so when it goes away, you get two options. You can let it flow down to your bottom line and become more profitable, or you can do what Shopify and Coinbase are planning on doing together in phase 2 of this partnership, which is incentivizing usage of USDC through rewards and exclusive rewards that they're allowed to uniquely provide, because, or not uniquely provide, but somewhat uniquely provide, because when you have these massive economies of scale, you generate, your marketplace is more productive and more efficient than the other guy, and that allows you to pass incremental value and savings and delight onto customers. So in that light, using stable coins in the crypto world and blockchain and all these things to create more secure, lower cost payments that eventually will benefit the consumer. I still don't know where you drive, like Evan was saying, I don't know where you drive differentiation from one platform to another. But from our point of view, I think it's a good thing. I think we'll probably, there's going to be more room in the pie to give us things like cash back or discounts on certain things or other variations of that, which I think is exciting. And then the other part of that is what Robinhood has been talking about a lot with tokenization of private assets. So, and you've had a lot of companies have had, I mean, some of the ad partners that I worked with in 2021, like Masterworks and on the art side, and Lex on the real estate side, like securitizing these assets and selling pieces of them to the public. And I think using blockchain and tokenization to do that makes a lot of sense, and can do things like create broader access to private asset classes that retail investors haven't really had access to. Now, that opens another can of worms. Like, do we want non-accredited investors to potentially have access to extremely speculative private companies? I think that's a debate that we could spend an hour talking about.
Yeah.
But I do think that this unlocks and enables that to happen more frequently.
Yeah, there's definitely a lot of that, and there's a real discussion within that as well. I mean, whenever I bring up the blockchain thing, I really need to differentiate myself from being this super crypto bull. It has nothing to do with speculative crypto, tokens. What I'm looking at is just purely the technology.
It's the dodgeball quote. Like, we're not so different, you and I. Like, I know you know you. No, sorry, go on.
But you know what though? I'm not looking for immediate names that will benefit. I almost look at it like the internet. Like, you don't have to find the Googles. Walmart's going to benefit. Like, everyone's going to benefit here. But there could be some potential names that I think people will start to question whether they are at risk of losing their current mode. That's another potential aspect. Is there security for user authentication, for payment rails, for all of these things that blockchain could potentially address? Without human error, without weekdays only in terms of actual settlement times or these sort of things. So I think that it's more of a benefit to every business, a benefit to the US dollar, a benefit to American businesses in general, actually international businesses in general, but there will be names that are threatened by this change.
Yeah, and one more thing I would add super quickly is, we're talking about differentiation and how do you stand out versus the other 50 products that are going to be similar, and it's brand trust, and it's reliance and uptime and brand trust. I'll say it 2 times because I think it's extremely important. And so what PayPal is doing with their stablecoin, you think about what's the most trusted brand in financial services, who has the broadest merchant adoption, who can make this work in the most comfortable and seamless way possible and jumpstart adoption, and it's PayPal. So are they going to be one of these companies that lets this pass them by, or are they going to be one of these companies that where they flex their brand ubiquity to extend this kind of intangible lead that they have over everyone else? And I think it's TBD. I mean, Visa and MasterCard and American Express, they're all working hard in this world. So who gets left behind and who figures it out? I think there are, like you said, I think there will be winners and losers, like there usually are. But yeah.
Yeah, and I don't think it'll be an immediate change either. I mean, just because we saw a lot of digitization doesn't mean that cash has gone away. I mean, in terms of the percentage of overall transactions, it's gone down the same way that in overall search and AI, Google search will have gone down in that pie, but Google search can still grow if the pie is expanding so freaking quickly. So I think a lot of that's going to happen for a lot of these traditional cards as well.
Was there am I crazy, or was there a Coinbase American Express co-branded card? I mean, that's interesting. I mean, that kind of late, and they're in with Bitcoin rewards. So it's
Yes.
just, there's a lot of new interesting products that are coming out. And I think a lot of them will flop, but a lot of them won't flop. So we'll see what the consumer responds to.
Yeah, the exact relationship, like I follow a lot of the fintech names. Robinhood is doing very well right now, but if the tokenization of real of stocks start to happen, and they already play a role in a lot of these derivative markets and everything for crypto, so maybe there's something to build on that for stocks as well. It'll be interesting watching the Coinbase versus Robinhood, battle of the highest rewards on credit cards and all of these nerdy things that I'll love to follow from a consumer point of view. But yeah. And Coinbase, I mean, they're in Canada, so I'm happy with them right now. Robinhood, maybe soon. I mean, they've done some acquisitions to get closer to Canada for sure. WonderFi. So
yeah. And a different unrelated note for Coinbase, I think you were telling me before the call, because I don't really follow it as closely as you do, but that they're launching equity trading, and in my mind that is that accurate or no?
they are asking SEC approval for potential blockchain based like tokenized shares of
kind of
companies.
loophole, like Kalshi's doing with sports betting a little bit,
Right.
loopholey. So yeah, I mean, and I mean, crypto is so violently cyclical, such high highs and low lows, that even something like a cyclical equity brokerage business could make them slightly less cyclical, in terms of their financials just aggressively reacting to whatever the macro backdrop is doing at any given point in time. So things like that, things like expanding more institutional level trading, whatever they can do to make their business not so violently skew up and down with the times, I think is a positive as well.
Yeah, I mean, overall, I'm not a shareholder in Coinbase, like I said, but whenever you look at the institutions that are working with different companies, especially in North America, they're choosing Coinbase. Like they have like a near 90% market share of the institutions that are picking Coinbase.
Even this JP Morgan thing that came up today, they're using Coinbase's base to build it on or whatever.
Yeah, exactly.
So funny just to hear all this news and then just listen to Jamie Dimon talk about how much he hates cryptocurrency. But that speaks to what Tannor is talking about. There are two different parts of this conversation. There is speculating on coins, and then there is building value creating payment rails that can save consumers money and make things safer and more secure. And I think that's where this is heading. That's actually going to create value and be a good thing for society.
And it tarnishes the reputation of what blockchain could do, right? I mean, this is like every advancement in technology. There's always the Wild West where people, see very silly things end up happening. And then there's real projects that end up being built as well. Like Bitcoin at its core could threaten US dollar, supremacy, if you want to call it that. But stable coins strengthen US dollar supremacy. So it's all very interesting, but overall, I think that it's going to be better for markets. It's deflationary. It's all sorts of great things. So, yeah. Do you guys have any other topics that we want to cover tonight? I mean, we're already at 38 minutes. Feels like it's just flown by today.
Can I ask Brad about? I feel like I've been seeing a couple Amazon ad related stories. I think I saw one today. Amazon and Disney was something. I definitely saw Amazon and Roku. We're also talking about like WhatsApp, but like, just curious with the latest in that space. I've also been like looking at TTD a little bit, but
yeah, I haven't seen the Disney news, but yesterday they signed the headlines were all exclusive partnership with Amazon's DSP. So from Roku and that inventory, which I mean, for someone who covers trade ads, it's like, oh my God, are they cutting all their other DSP partnerships? And that's not what's happening. It's an exclusive data sharing and targeting tool that they're integrating with Amazon's demand side platform. So a lot different than what headlines said and more context needed, as it so often is. But I think there are two things happening in the open internet, and I should use air quotations because Amazon is, I guess you could call it an open internet demand side platform, but I mean, they still own a lot of that supply. So they still have that direct conflict of interest in placing open internet demand with their own impressions, just like Google did, so let me focus for a second. So two things happening. All this antitrust noise happening for Alphabet, a lot of it centers around their network business. So the fact that they are the publisher and trying to be the DSP as well. So they represent the demand and the supply with YouTube and search and all those things. So kind of double dipping, and there's been a lot of complaints about them unfairly routing impressions not to the top bidder and who's willing to pay most for it, but through their own properties to make more money and grow their commission and grow their piece of the pie. So a lot of good things to say about Google and Alphabet, but you could argue that they've been a bit shady in that regard. And so antitrust is probably going to, I think, if there are any ultimatums or rulings or if anything actually happens besides a slap on the wrist symbolically, I think they're going to be forced to stop having a network business. It's called DV360. And for the last few years, they've been phasing it out of their search ad growth engine of their overall digital advertising business, and deprioritizing it very strongly. So focusing on YouTube and other campaign creation tools, in a way like Performance Max, and away from being this two-sided network where they're maybe doing more than they should be. So from an open internet point of view, that's been making things a lot more fair and a lot more competitive and transparent. Just because when Google kind of takes themselves out of it, it just creates fewer conflicts of interest and makes things inherently work better. But then, so that's a lot of words to say Google is becoming a weaker competitor in the space. Not in digital advertising, but in programmatic digital advertising within this open internet niche that they really technically shouldn't be playing in any way because they're a giant walled garden. And Amazon is really kind of stepping in as this new walled garden that is very quickly growing their demand side platform, and whether that's routing inventory through their marketplace or through Amazon Prime or Prime Video, or other non-Amazon properties eventually, they are becoming a stronger competitor. They are taking. I mean, you see anecdotal anonymous marketers saying, "I moved $10 million from Trade Desk to Amazon," and I'm sure there are 50 of them just like that, and 50 other ones who have moved $10 million from some other place to Trade Desk. So it's a gigantic market. It's a fragmented market. From a Trade Desk point of view, they've been outcompeting Google. They had been outcompeting a much more focused Google for several years, and now they're outcompeting them in terms of growth versus their network business even more, just because Google's deprioritizing. So I think Amazon is going to have a ton of success in digital advertising. I think they have a lot of digital real estate to monetize, just like Meta does, that they haven't really taken advantage of like they can. That's going to be extremely margin accretive, just like it is for Uber, just like it is for Mercado Libre, just like it is for all of these marketplaces that are layering on advertising. But I don't really think that these anecdotes we're seeing about this company pulling a small percentage of their budget from this guy to that guy is it all structural or at all signal, and it's quite noisy. Not to mention the fact that there was an article that came out 2 weeks ago, I think, that had all these case studies and what I'm currently citing. And then at the bottom of the article, you said all of this happened during Q1. So before Trade Desk reported a very good quarter and a very good guide, and saying that their platform launch that they messed up a quarter before has all been fixed, and the ship has been righted, and it's back to business as usual. So I think we're going to hear a lot of information over the next few years about Amazon winning on their DSP and winning in digital advertising, because they have every right to win. And I don't think that replaces the need for and some people are going to think I'm citing Trade Desk CEO right now, but I truly believe he's right when he says it. This does not replace the need for a completely unbiased open internet company to route demand to publishers in a way that no one has to second guess. Do you own any of the supply? Do you have any conflict of interest? Do you have any motivation to do anything but make me the most possible money you can possibly make me? And Google and Amazon can't possibly say that they're entirely objective. And Trade Desk has built a business to be entirely objective. So that's why they're signing these deals with Walmart and Walgreens and Albertsons on the digital media side. That's why they're signing. That's why they helped Walmart build their demand side platform. That's why they're signing deals for their ID business called UID2 with HBO and Time Warner, and then also with Disney again, and with Roku also. So there's a lot of moving pieces right now, but I think there's a lot of moving pieces because so much of the advertising space needs to move to this fully addressable, biddable world, where publishers can make more money to fund all of their content spend, and where advertisers are willing to pay more money because they're making so much more on these impressions, because they're so much more targeted and less spray and pray. That I think a lot of moving pieces. It's going to be a lot of winners, and I think Trade Desk is going to be one of those winners. So yeah. Sorry.
Yeah, I recently started following Trade Desk, and as you were talking about the potential of Google leaving the open internet, I was just thinking about Jeff Green's comments in the last 2 quarters, and I mean, he's been a prediction giant for a lot of, you know, the advertising space, open internet space. So that's his big new thing right now, is that a lot of their problems are coming from the open internet, and they seriously don't even need to be a part of it because they have such massive businesses in IP that they already own. So
they don't need it. Yeah. So I said, what Tannor just said is such a good point. If I didn't make that clearly enough, I should have. Google getting weaker in the network section of their digital advertising business does not mean their digital advertising business is shrinking or shriveling down. YouTube is absolutely killing it. Search ads, AI overviews, Lens, more impressions from that photo search product, all killing it. It's just that one piece where they have actively said, we're going to back off of that and focus on these other things. And I think they know it's because probably what's coming from regulators.
Can I ask you a small question about a name that I know you follow? I'm not currently in it right now. PayPal advertising. Dr. Mark Reether, formerly Amazon, formerly Uber, has come over to PayPal to create a pretty interesting advertising platform. Do you think that plays a big part in the company? I know this is really off topic, but
I love questions about stocks. So no worries about being off topic, but okay. So PayPal is structuring this ad business in a way where they're not trying to directly turn this into a massive financial driver for their company. They're trying to create more productive digital advertisement places on behalf of their merchants so that their merchants can enjoy higher conversion rates and make more money. And then their take rate from that money eventually makes them more money indirectly. So I guess you can call it indirect monetization, but really that's the aim. But I think, what makes advertising really good and effective, it's personalization. And how do you create personalization? It's with more customer data than the other guy has. And so when PayPal represents hundreds of millions of consumers and has active payment history on, I think, over 100 million power users, I think they called it as of 2 quarters ago, they have a lot of information and a lot of signal and insight on what product somebody wants to see, what payment method they want to be surfaced, what percent discount I need to give you in order to make you significantly more likely to close a purchase. So that's really what they're doing. They're finally, I mean, they've had all these assets for such a long time and they've been so behind in actually deploying them and using them. And I think that's just because their old leadership was, whatever. The new team is better. Is better. I'll leave it there. I don't really want to talk smack about someone who isn't here to defend themselves. But I think they've been so behind in monetizing and taking advantage of this massive asset that we've kind of begun to think of PayPal as a checkout button, because they've let that happen. They've let themselves turn into a checkout button that 50 other people have. But now that they're actually, and they call it agentic commerce. I mean, what they mean is we're creating more granular personalized experiences as soon as someone enters a website, to make them way more likely to convert in terms of being from just a visitor to a purchaser. And again, when they get a take rate of every single sale that closes, I believe they get a take rate. And this is also treated somewhat like an affiliate style arrangement with some of their ad products, where they're getting paid every single time their placements are leading to sales. But in terms of these new placements that I'm pretty sure you're citing, where the ad has basically a PayPal checkout button on it, and it's a few clicks to being done, especially with digital wallet users like myself, click, checkout, done. I think that's pretty powerful. And I think that's pretty powerful for making sure, just like we just talked about with Trade Desk, that return on ad spend, every single dollar that I'm spending is netting 10 or 15 or 20 cents more on the net. So exciting. And I don't think exciting from a fact that in 3 or 4 years, we're going to have another PayPal line item where digital ad revenue is X% of total revenue and growing X%, like Uber has kind of. But I think it will be a natural uplift to their overall growth engine for branded checkout, which is super important for their business.
I also think there's parts in it that I also find interesting, where like there's a lot of privacy changes recently on the internet, which makes advertising hard in some different spaces, blocking out cookies or whatever that stop trackers on those ads from continuing on. But on transaction, you have you know the user that's transacting, and you know the merchant that you're buying from. And so from a PayPal point of view, they just have such an interesting advantage, like being able to charge per conversion rather than just per impression or something like this, that I just think is really interesting. And I can't wait to see, over the next 24 months or whatever, how this actually ends up evolving. But
I mean, it takes all the financial risk out of it for that structure takes all the financial risk out of it for merchants, where I'm paying you for advertising, but I am quite literally only going to send you a check if you send me a larger check, and if you deliver me more financial value. So,
which means that they can charge a lot more though too.
Yeah, and I think it's clear how that can resonate.
Yeah.
So,
Evan, any other topics?
No, nothing for me. I was gonna maybe think of something mean I could say about Michigan or like Detroit football or something, but nothing came to mind super quickly. I'm excited for Jerome Powell tomorrow. I know we're talking about the individual stocks here, but the macro is definitely rearing its head in as much as it possibly can right now. So a lot of interesting stuff happening. I can't imagine what Powell's going to say tomorrow. So I'm intrigued how that one ends up going. We're just in a weird place in this market right now. So
yeah, the world is a weird place right now, man. But hopefully it was a fun distraction for listeners. It was a fun distraction for me, for sure. I love talking about stocks.
I enjoy it.
Whenever we can escape all the other very, very real stuff happening to talk about real stuff, but less emotional real stuff. I think that's needed. I think it's healthy.
Ladies and gentlemen, thank you all so much for watching. Really do appreciate all of your time. But bye for now.
Appreciate you all.